Hello. Good. Just give me one second. Okay. Hello. Good evening, everyone. I will wait 1 minute to let everyone enter, and then we'll start. As you can see, there is a Q&A function and also a chat function. So please feel free to use that one. Maybe that's also interesting. You can use the chat function to let us know where you're from, for example, because I think people from all over the world are following the presentation right now. So we will have a lovely time here. So let's have some fun over the next 45 minutes, 1 hour. And in the end, there will also be some room to ask questions. So you see chat function, this is more for general chat, like letting us know where you're from. And then the Q&A function is more for asking real questions, which we'll go over in the end. So I see people from New York, England, Dubai, Belgium, Netherlands, Florida, Canada, Mexico, Australia. So a lot of people in this chat. So that is amazing, and thank you for this. So 600 people are joining. I think more people will enter in the minutes ahead. So thanks everyone for spending your very precious time to talk about, well, what are we going to talk about today? Tiny titans. So companies that have the potential to go from tiny, small companies to titans, so very successful companies. Think about businesses like Fair Isaac 20 years ago, 30 years ago, which did really well. Pool Corporation. So the goal of Tiny Titans in general, I would say, is to find companies that are small today, but that have the potential to go 10x, 20x, 30x, or best case, even 100x, so 100 baggers over time. So, and by the way, as mentioned, feel free to use the Q&A function, feel free to use the chat function. The more feedback we gain for you, the more valuable this webinar will be. Also, the more valuable the service Tiny Titans will be in the end. So I truly appreciate that. So what will we go over today? Well, first of all, an introduction, a brief introduction to Tiny Titans. How can you identify such a company yourself? How can you find a company that has the potential to go 10x or even 100x over time? We'll go over our watch lists. We go over the stock screener we will use, concrete examples. And then in the end, I will also give some more concrete tips or examples about the launch, which will take place on the 16th of September, as you know. And it will be a very exclusive service and on a first come, first serve basis. So if you haven't done that, well, if you scan this QR code, you put the launch of Tiny Titans at 16 September at 2 p.m. CET and 8 a.m. ET in your calendar. So I would highly encourage you to do so, because I'm not sure how long the doors will open. We will monitor everything very strictly in the beginning, and just to see whether we have an impact on the stock price. If we do, and we notice that after 1 hour, for example, after the doors have been open for 1 hour, we will close the doors. Well, if it isn't the case, well, we will let the doors open for a while. But yeah, it might be sold out really soon. So if you even slightly consider it, I would highly encourage you to put it in your calendar here and to be in front of your laptop when the launch takes place. But first things first, let's talk about the general concept. Let's teach you how you could do something yourself, how you can find Tiny Titans yourself. And that's what we are going to do in the introduction here. So in general, as already mentioned, it will be something that's very exclusive. So only a few people will be allowed. Why? Because we will invest in those companies with a market cap below 3 billion, sometimes even below 1 billion or even smaller. And we really want to avoid that we influence the stock prices too much. So that's why, let's be honest with each other, it will be quite expensive. And that's also why only a limited amount of spots are available. So the entire goal is small cap stocks and high quality. So we'll combine those. So basically, compounding quality is looking for stocks, well, mid and large caps that are high quality. With Tiny Titans, we will look in the same field, but for small companies. So companies that can go 10x over time. And I think it's only fair, and some of you who were here for the first minute briefly saw Willem in the video as well. It's only fair to say, well, I am not doing this on my own at all. Honest answer, I couldn't. Because here you see a picture of the team. So over the past 9, 10, even 11 months, we were working really hard on this with an entire team. So 4 people are dedicating a lot of time to Tiny Titans. If I call out of my head, we have written so far together 12 full investment cases of roughly 30, 40 pages. So almost 500 pages of investment research, and that's with the team. If we go from the left front to the left, in the back, on the left front you see Willem, which you might already know. So he has been with Compounding Quality for 1 year right now, over a year actually, and is also doing, there you saw Willem. So hello Willem. So kudos to Willem. He is doing tremendous work. Then on the right, with the shirt, with the green shirt, you see Jochem. So Jochem has also been investing for a long time with a lot of passion. So far, he has written some amazing investment cases about, just to give you some example, Lemaitre Vascular, San Lorenzo, which we'll cover later, other companies like Doximity, and so on. On the back right, you have Milan, who I'm a bit jealous of, because he's still quite young, as you might see in the picture, but he's way better than I was when I was his age. So he is doing an amazing job. And then on the left, in the back, you see the the guy with the least experience here, or the guy who writes the least good investment cases, and that's me. So I can also be, I'm very happy with the team we've built here. Those are all exceptional people, and that's something we can be proud of. Now, a question you might have is, fun, Peter, but we have Compounding Quality. Why do you work on Tiny Titans right now? Why do you think Tiny Titans is interesting? And by the way, I see 900 people are following this presentation right now, which is amazing. So thank you for that. I think in general, there are 2 main reasons why Tiny Titans, well, why it makes sense and why it's so promising. So the first reason is, well, you see this beautiful quote from Warren Buffett, who said, well, I think I could make you a return of 50% per year when I would only manage 1 million. And I was actually at the annual general shareholder meeting when Buffett said this live, and Charlie Munger was still there. So Charlie Munger, you see him here. Buffett, you see him here. Charlie Munger was still there, and he said, well, I think Buffett is right. And what's the main reason for that? Well, the larger you get as an investor, the more you are obliged to invest in large companies, and the outperformance is lower for those large companies. Another thing Warren Buffett said is, go where competition is weak. Well, where's competition weak? In the small cap space, because there's almost no research there. And you also see this here. So size matters, at least in the stock market. If we look at the performance of Berkshire Hathaway, the performance of Warren Buffett, you will see that in the 60s, the 1960s, his outperformance was absolutely tremendous. So 23% per year. Just imagine an average return of almost 30% per year. But then Buffett became more and more and more successful. He starts to manage more and more money. And because of that, it gets harder to outperform. And you see that his outperformance has gradually been declining over the years. That's also something that I see, or I knew, or I experienced in working in the industry and working in the asset management industry, managing an equity fund. Well, we managed, or the fund I was involved with had 200 to 250 million in assets under management, but we never looked at a company with a market cap below 10 billion. And we found plenty of companies who looked so attractive with a market cap of, let's say, 4 billion, 5 billion, 2 billion, but you just couldn't invest in them because you would influence the stock price. So I think that's also one of the big advantages that you have in this case. Most of you are investing your own money, maybe some family money, a small family office, a small fund. In that case, you can still invest in the small companies. And when you do your homework there, That's where you can make a real difference. So that is really interesting. So key lesson 1 here, the larger you get, the lower your performance. And you see that with Buffett, you see the same with Terry Smith, Francois Rochon, and so on. And the second reason why Tiny Titans definitely is a necessity is when we look at compounding quality. So today, compounding quality has roughly 1.5 million readers across all channels and 500,000 email subscribers on the website. When we write about the company, we influence the stock price too much. So here's an example of FitLife Brands, which is a tremendous business, if you ask me. I will also come back on that later in the examples. But we briefly mentioned it in the compounding quality, and the stock goes up 8%, plus 8%, and even plus 40% in the days and weeks ahead, which is not what you want. So you don't want to influence the stock prices. And that's exactly why Tiny Titans will launch, why Tiny Titans will go live on the 16th of September. And I think this is a slide that tells it all. So you probably already know by now that, for example, quality stocks outperform the market. Family-run businesses or owner-run businesses outperform the market. Well, the same is true here. When you can adapt or implement that quality investing philosophy, still led by an owner-operator within the small cap space, you see here that the outperformance is tremendous. So you need to make your own homework in this field because there is no research available. A lot of the companies we will cover, for example, well, there's no research or no report you can find online. Sometimes we even need to translate certain reports from Polish to English, for example, because there's just no English report or annual report available. But when you do your homework with, and that's something we will probably or hopefully help you with, then you can, make a huge difference on the stock market. So that's why Tiny Titans is so interesting. And that's also why I think for you, for example, that those kind of companies are interesting additions to your portfolio. So now we've gone over the introduction. Let's go into the investment philosophy. And definitely for most of the people who are attending, in the end, there will be some examples, 3 examples of Tiny Titans. So please stick and look at them because they could be really interesting. Those are companies we are seriously looking into right now. But first, let's go over the investment philosophy. Well, I would say this quote tells it all. I have the simplest of tastes. I only like the best. So it's still true, just like it's true for compounding quality for Tiny Titans. Only the best of the best is good enough for us. So we only want the best companies, the most healthy companies, the most quality companies, but then within the small cap space and micro cap space with a market cap below 3 billion. This is so interesting or so important for us. And for people who are very familiar with compounding quality, this will probably ring a bell. So those are the 7 characteristics we are looking for when we are identifying a Tiny Titan. And it's more or less the same for compounding quality. So once again, what we are doing here is we are combining 7 criteria that on their own should be able to outperform the market. And based on that, we are going to build a watch list. Right now, there are 94 companies on the watch list. More on that later. And based on that watch list, well, we are going to build a portfolio. So what is important? First and foremost, a strong balance sheet. The healthier the balance sheet, the more flexibility it has, the more room it has to invest in its own organic growth, reinvestment opportunities, and so on. Second point is skin in the game. So the majority of the portfolio will be invested in owner operators. In other words, where the founder is still the CEO and has 30 to 40% of his own money invested in the stock. Well, so important because then you know your incentives are aligned. High profitability. So we are looking for companies with a profit margin of at least 10%. So when a company makes $100 in revenue, we want at least $10 in profit. And I think the fourth point is also so important for Tiny Titans. I can't highlight this enough. Attractive growth. Just because they are so small a lot of those companies have still so much room for growth. For example, one company I have in my mind right now, and we will get back to that example as well later. But some companies, I'm quite comfortable to say that they could 5x their EPS, their earnings, within the next 5-6 years. And if you have that, well, in that case, normally in a rational market, the stock price should follow. So attractive growth is so important in this place, as well as the great capital allocation skills. But what we can say here, and that's also the sixth point, well, just because they are so small, those companies always have plenty of reinvestment opportunities. They can reinvest the cash flow they generate almost entirely in themselves to grow. And I think it makes complete sense that when you talk about a company that is, for example, FitLife Brands with a market cap of just a few million, when you compare them to, let's say, Microsoft, it's way easier for a company like FitLife Brands to double their money or double their revenue compared to Microsoft. So that's what we are trying to achieve here. And those are the 6 characteristics we look for in general. And then you also see a 7th one, obviously. So we want to combine those characteristics at an attractive valuation level. So those are the building blocks on which we are creating our watch lists. And based on those 7 building blocks, well, we have created a checklist or a stock screener to make it happen. Basically, to first screen for some of those companies that might fit the criteria. And based on that, we are going to do, or we did our own homework over the past 9 months or 10 months. And we identified the most interesting ones. So that's what you see here. So the stock screener. So as you can see, 95% of all companies we cover here will have a market cap below 3 billion, which is small, right? Which is tiny. Healthy balance sheet, we want a net debt on EBITDA below 3. We want no extra shares issued because dilution hurts you as a shareholder, and we don't want that. The high profit margin we already talked about. We want great capital allocation skills, so a high return on invested capital. And then we want attractive growth. So those are the things we want to see in a stock screener. And you can do that via Fiscal AI, by the way. And we will go over some results soon. By the way, I see a lot of questions coming in. Please notice, I see already 70 questions. Please notice that you can upvote the questions. So if you see someone else asking a question and you upvote that one, it will appear higher on the list. And we will probably start with the ones who have the most upvotes, because the majority of partners will think that those are the most interesting ones. But anyway, stock screener, let's go to some examples. So here you have some examples of things you see are companies that used to match these criteria in the past. And I think when you read Compounding Quality, you will see a lot of companies that look very, very familiar. Ulta Beauty, for example, on 6th place, increased by 1,500% over the past 15 years. Aluminium Fried, Tractor Supply, O'Reilly, Fair Isaac, Domino's Pizza, Monster Beverage, AutoZone, and so on. Those companies are all companies that did tremendously well in the past, and that actually, on the previous slide here, matched those criteria in the past. So in other words, Tiny Titans, those are companies that were tiny, but have already made it to Titan. The goal for Tiny Titans, obviously, is to identify companies that are still tiny, not Titans yet, and that have the potential to go to Titans. And I think that's really interesting, because one thing we did is backtest the criteria we used. And then here you see some companies that match those criteria, like a Fair Isaac over the past 20 years, plus 4,000%, like a Rollins, plus 2,500%, Exxon Enterprise, plus 7,000%, Texas Pacific Land, almost plus 10,000%. And I don't think it's a secret. I think it's very clear that you only need a few companies like this. You only need one company in your portfolio that goes 100x to make your investment journey very worthwhile, right? Just imagine that you have 100,000 to invest. You invest in 10 companies, 9 go bankrupt, but the 10th one is Texas Pacific Land. Well, in that case, your 100K became 1 million just from one. Sorry, your 10K became worth 1 million. Your 100K became worth 10 million just from that one investment. So those are the companies that we want to identify. And I hear some people already, thinking right now, what is the example of some of those kind of companies? Well, 100 Baggers, right? 100 Baggers, Chris Mayer wrote a phenomenal book about this. 100 Baggers are companies that, increased 100x. In other words, every $1,000 you invested became worth $100,000. Just, there are some examples in this list. Cisco, you have Roper Industries, you have Biogen, NVR, Starbucks, Monster Beverage, Amazon, Tractor Supply, Nexstar, and so on. And once again, I'm looking to the guy on the left here, for me, Warren Buffett. That's also something important to note. I think Buffett said it himself. If you, for example, take out the 14 best investments of Berkshire Hathaway, well, our returns would just have been mediocre, and nobody would talk about us. In other words, it's even for Warren Buffett, the best investor in the world, that we really let his winners run. That's really important. Let your winners run. Let them do their thing. And you only need a few like this to be very, very successful as an investor. And that's exactly the goal here. To give you one concrete example, and by the way, I see 985 people are looking at this live. We have room for 1,000 people, so we might, the other people who are about to enter might not be able to get in. So thanks for this, and lucky for you and for us that you are in this call. Another example here, Games Workshop. So Games Workshop is probably one of my most successful investments ever, because you see the email here, I identified or I found the company in 2015. So that's exactly 10 years ago. And I was lucky about Gmail. I still found the email I sent to a friend. Look, I found Games Workshop. I made my investment case. I'm going to buy the company. What do you think? And on the next slide here, you find the performance of the stock. And you see that Games Workshop, they increased by 5,000% since 2015. And even by 12,000% since 2010. So they did phenomenally well. I don't think I need to explain to you that this is exactly what we want. And by the way, please use the chat function if you have a very successful investment that you've made in the past, a company that did tremendously well. Feel free to let it know in the chat. That's really interesting for us as well to learn, maybe to get some new ideas, to get to know some other investors. So really curious to know about you as well in the chat. What is your best investment so far? And I can see, I will catch up whether someone, the answers, or look at the answers. So feel free to use the chat function for that. Maybe to elaborate a bit on that for Games Workshop, for example. So it's just so you know, Games Workshop is a company that produces miniatures games. It's a company that is within the portfolio of Compounding Quality, and it did tremendously well as well. I think it's up 80% in just over a year. And I see some people in the chat, Revolut, Aventium, Lotus Bakeries. So a lot of people from Belgium seem to be following again. Eli Lilly is also an amazing one. So just, NVIDIA, that's a perfect example. Just imagine that you invested in NVIDIA 10 years ago. Well, then it doesn't really matter which other investments you made. You would have done quite well. And I see 1,004 people, 1,005 people are in the webinar. So we are full right now. So this is so much fun. Even more examples of Tiny Titans. Well, it might be a bit might not be readable, but you can zoom in a bit when you see companies on the watch list right now. So we have a watch list of 94 companies. You see that companies like Chapters Group are here, IntelliJo, AppFolio, the company Mark Leonard from Constellation Software is jealous of, Synectic, Alpha Group Alpha Group got acquired or got an acquisition bid recently, which is a pity. The stock is up 80% or over 80% since the beginning of the year. It's probably a company that we would have bought for Tiny Titans. Right now, well, the stock is up 80% and will be acquired. So that's a pity, but it shows that we are on the right track with trying to identify these kind of companies. So this is a screenshot with some examples from the watch list. And yeah, the watch list obviously is something you will receive at Tiny Titans. And one interesting thing we also did at Tiny Titans is just look at if we would have just bought an equal weight portfolio with all the companies we identified for Tiny Titans, all the companies we think are interesting, well, how would we have done? And that's what you see here on this slide. This is the performance over the past 5 years. And then, yeah, I took the average in the very long term for the S&P. Obviously, the past 5 years were also a bit better. But you see that the average return of the portfolio has almost been 17% per year. So that's phenomenal. It means that you double your money, let's say, what is it, every 3.4 years, something like that. So the upside and the performance has been tremendous. And now maybe some critical people think, okay, Peter, interesting, but yeah, that's the past. What about the future? Well, I would say I'm still very comfortable to say that Tiny Titans, the watch list as a rule, will outperform the market. Why? Well, just look at the next slide. If you compare the fundamentals of those Tiny Titans with the S&P 500, you see that those companies are way, way better businesses. So a healthier balance sheet, a lower capital intensity, better capital allocation, more profitable, higher growth. So just look at the growth, for example. The expected EPS is 20% per year, 21.2% to be exact, which is, yeah, just phenomenal. And if we make the assumption that in the long term, stock prices follow the evolution of the intrinsic value, then this portfolio should do in the same size in terms of performance. So that's amazing. And by the way, if everything goes right now, you will also see a poll popping up your screen. Just curious to know whether you think Tiny Titans is something interesting, whether those high quality small cap stocks are something interesting, or whether you think that they won't outperform. So I see in the poll 95%, 96% right now is saying, look, this will be or I think they will outperform. 13 people out of 1,000 say, I'm not sure. So let's see. The poll will run for 1 more minute. And yeah, for me at least, I think it's the same for the entire team, for Willem, for Jochem, for Milan. We are very comfortable to say that it will continue to do well. Another question a lot of people have asked me is, well, what can you expect from Tiny Titans? What kind of return can you expect? Well, the most important thing is you never know what the future will bring. You only have fortune tellers and liars know what the market will do in the future. So we don't know, but we can give estimates. We can put objectives and goals for ourselves. Well, what's the goal? We want to invest in companies where we think they can double at least every 5 years. And Willem made it beautiful. You see the power of compounding here. So if you double your money every 5 years, obviously you have 2x your money after 5 years, but also 4x your money after 10 years, 16x your money after 20 years, and even 256 times your money every 40 years. So that's the power of compounding put to work. That's the magic of compounding put to work. And that's exactly what we want to achieve. And that's also exactly here how we want to outperform the market. Those are data for almost 100 years. And then you see that an investment in the S&P of 10,000 USD would have given you roughly 10 million. If you would have invested in the small cap quality stocks, it would be something like 150 million. So there you also see if you can outperform the market slightly for very, very long periods of time, well, your level of outperformance is amazing. Just looking at the poll, 96% is interested in those small, tiny, high quality stocks. So that's means a lot for us to read as well. And we think we are in exactly the same camp. So we talked about why those small, high quality stocks might be interesting. We talked about the investment philosophy. And I think one point that is also really important to make, and one point that is so important in the small cap space, I can't highlight it enough, is in those smaller companies, there often is not so much information available. And that's why it's really important to also talk with management, to talk with the CEO, to have meetings with him one-on-one, just because it gives you access to information that nobody else has. So here you see a visual. With those smaller companies, it's not just about sitting behind your desk, sitting behind your laptop all day and reading annual reports. Obviously, that's still a very important pillar to analyze those companies, but it's also about getting out there, talking with the CEO, meeting him, asking him annoying questions, see what kind of person he is like in real life. Like, is he walking the talk? Is he actually doing what he is saying that he will do? That's so important. So I think I've never had such an intense summer as this summer, because I traveled all day long and didn't take a single day of holidays so far. So I went to Hamburg, went to Stockholm, went to Dublin, went to Washington, D.C., went to New York, went to Chicago, went to Baltimore, just to meet companies and to meet CEOs and to talk with fund managers, to talk about those small caps, because there's no information available about it on the internet. So here, for example, early July, on the left, you see me, but that's not interesting at all. On the right, you see Jan Moore, the CEO of Chapters Group. It's a very interesting business, if you ask me. It will be a very promising stock to watch over the years ahead. It's expensive in terms of valuation, but really interesting. And I felt like, well, what happened there basically is we traveled from Belgium to Hamburg, 6-7 hours to meet them. And that's also, they appreciate you that you take 7 hours, 7 hours one way and 7 hours back, so 14 hours to meet them, and they give you access to them. You can talk with them one-on-one for 1 hour, and that really gives you insights. We also show it to you at the end. Well, we created a report of roughly 10 pages with everything Jan Moore, so the CEO here, said. It's really interesting to form an investment case with also some interesting other ideas. So this is an interesting one. Here, another one, Judges Scientific, David Cicerel, the CEO. So I met him in Omaha, the Berkshire AGM. Judges is a serial acquirer in medical equipment and so on. It's also quite interesting in the portfolio of Compounding Quality. So also met him. Here, I don't think this guy needs an introduction. A lot of respect for him. So this is Tom Gaynor, the CEO of Markel, the insurance business. Markel is trying to build something similar like Berkshire Hathaway. So for example, I still recall it here. When I met him, we talked about Watsco, the company Watsco, for 30 minutes, an HVAC company in the US that is too expensive today, if you ask me. But if the valuation would come one day, well, then it could be a really interesting stock. Here, partners of Compounding Quality will also know him really well. So on the left or on the right, you have Brad Kelly, the CEO of Kelly Partners Group. On the left, Kenneth Ko, so the CFO of Kelly Partners Group. And just having those conversations, it gives you a true grasp about what those people are about. And that's so interesting in general. 2 extra pictures, I will go quickly over them. Just here in the panel at the Omaha Berkshire AGM. And this summer, I also was in New York to meet some fund managers, some hedge fund managers, to talk about some companies, and obviously to touch the bill, to wish you all an increasing stock prices and a happy new year on the stock market. So let's see whether that helps or not over the next 12 months. So we talked about what those small cap high quality stocks are all about. We talked about the investment philosophy. I think this is really important to mention, that tell you, look, it's not just about sitting behind your desk and read annual reports, but it's also about getting out there, talking with the CEO, and doing that. So that's really important. So that's an important one. And now let's dive a bit deeper in what to expect. And after that, we will go into the 3 examples that you have. So as you know by now, Tiny Titans will be very exclusive. So the last thing I want is that some people enter who are not into the philosophy of Tiny Titans. So let me be clear, Tiny Titans is not for everyone. It might not be for you if, you want every idea to work, you want to get rich quick, you have, maybe limited amounts to invest, whether you can invest when a stock declines by 30%. Well, in that case, I would say, please leave the available slots to someone who is into the philosophy, someone who gets the long-term plan and try to find those 100 baggers. So I would say, well, Tiny Titans is for people who really want to use a simple system that has proven to work. People will think or will want to outperform the market in the long term. That's exactly the goal here. And we want to invest in small companies with tremendous upside potential. So that's where Tiny Titans is for. If you think that's interesting, well, that's something for you. On the next slide, we will also dive into something that is also important and something that might be a question in your head is, well, cool, Peter, but what's actually the difference between Compounding Quality and Tiny Titans? So that's summed up in this slide. If we look at Compounding Quality, I would say Compounding Quality is all about staying rich, while Tiny Titans is more about getting rich. Compounding Quality is more about high quality, mid cap and large cap stocks, while Tiny Titans is about the smaller companies. So they have higher risk, but they have way more upside potential. At Compounding Quality, you have examples like we can invest in companies like Visa, we can invest in companies like MSCI and companies like that. And the portfolio, well, right now as 18 names, it will be a max of 20, max 25 names, but probably will stick more to 17, 18, 19 names. Because Tiny Titans are riskier, but have way more upside potential, it will be a portfolio of 30 to 35 names just to diversify a bit more. And maybe that's also interesting to highlight here. As you know, I invest real money in the portfolio. I have skin in the game, just like we want the companies we invest in, the CEOs, to have skin in the game. So I will invest in Tiny Titans myself as well. Well, to have a great split, I think investing 70 to 75% of your portfolio in Compounding Quality and 25 to 20% in Tiny Titans, that's a good split. That's exactly what I'm going to do here. So I would say the conclusion here, Compounding Quality is about staying rich, Tiny Titans, getting rich, more risk, but way more upside potential. So that's in general what to expect. But if you have questions, feel free to ask them. I see we have 140 questions already. So I think we will go on over the next 6 hours to answer them all. No, I'm just kidding. But we will do the most popular ones, and we will see whether there are still important ones. We will get over them via email, so please keep them coming. So now we've outlined the entire philosophy a bit. I think it's time to do 3 examples. 3 examples we brought for you. Maybe that's a fun game, and in the meantime, I will take a sip of water. If you think about small cap quality stocks, if you think about Tiny Titans, which companies do you think about? Feel free to use the chat function, and I'm curious to find out whether someone gives an example that we also brought over the next 3 slides. So waiting for the answers. I'll do the first one in the meantime. There seems to be a small lag probably because so many people are following. I see Intellego, Nebius, Hims and Hers, Norbit. Norbit is Palantir. Palantir is not a small cap, I would say. Roku, that's an interesting one. Starts to become interesting. The stock is down 20% year to date. So that's something we love to see because this is a company we are tracking. Kraken, Xpel, Doximity, Topicus, Genmap, Norbit, a lot of companies coming. I didn't see a company yet, Computer Modeling Group. So Michel Polnet, you are the winner here because the Computer Modeling Group is one example we brought for you. It's the third example. So let's first do the first one, and this is San Lorenzo. I think people will use the community of compounding quality a lot, have already know San Lorenzo quite well. So San Lorenzo is a company that builds luxury yachts to the ultra rich. So it's a very exclusive product. So all those luxury yachts are custom made, and it's a phenomenal business. Why? Because the CEO, he still owns over 50% of the company. He's consistently buying more shares. Also, the company itself is buying its own shares to decline the shares outstanding, which is great for you as a shareholder as well. So it doesn't happen that often that you see a company that's such high quality at such cheap valuation levels. And that's also why the expected return, you see that, well, the expected return is 14.9% per year. So that would basically mean that you double your money every 5 years. So that's exactly what we want. So San Lorenzo is definitely a company that we are tracking. Next one, and maybe let me quickly go over the chat. We Cloudflare, Eton, Cyberfix, TerraVest, San Lorenzo. So someone, Andreas, gave the right answer before I saw it. So a lot of, actually it's funny because even the chat right now is, you could build a watch list from that. So a lot of interesting ideas there. So yeah, San Lorenzo. Second example I brought for you today is, and I briefly already touched upon it, FitLife Brands. FitLife Brands is amazing. It's an amazing business. By the way, also William Thorndike from the book The Outsiders is involved in FitLife Brands, which is amazing. And in short, well, what does FitLife do? Well, they sell nutritional supplements and wellness products. So think about products like protein shakes when you go to the gym, weight gainers, creatine, and stuff like that. And what the most interesting thing was, a few years ago, FitLife Brands was struggling, but then Dayton Yutt took over the company, and he created the 50 bagger. So the company already increased 50x in just a few years. But the funny thing is, it's still a very small company, and I think this company still has so much room for growth. So if you invest here, well, you invest alongside Mr. Yutt. As you can see, insiders own 61% of the company, which is just phenomenal, to put it that way. And if you see at the expected return also here, 15.2% per year. In other words, if this would be correct, if our calculations would be correct, yeah, you double your money every 5 years, which is exactly what you want. And to give that example, well, if you look at FitLife Brands right now, I think the stock has a market cap of 165 million USD, of which the CEO owns over 60%. So we can tell it's still a small company with plenty of upside potential. And then the third example I brought for you is Computer Modeling Group. So this is also some kind of mini Constellation software that you will get. So a lot of people from Constellation software are involved here. So CMG, Computer Modeling Group, is trading at one of the cheapest valuation levels of the past 10 years. It's a company active in software for oil and gas companies, but they are slowly turning into becoming a serial acquirer. And that's something that's really interesting, because when you are making that move and you have people from Constellation software involved who can help you, well, the upside is absolutely tremendous. So also here you see an expected return of 15.1% per year, which is just amazing, I would say. So those are the 3 examples I brought to you, 3 examples from the watch list of 94 companies. And based on those 94 companies, well, we are building our portfolio starting from the 16th of September. So here in the next section, I will briefly talk about the launch. And then also, let's open the floor, let's open the door for some questions and answer the most common ones. In essence, so what you need to know is the launch will be on the 16th of September at 8 a.m. Eastern Time and 2 p.m. CET, a small typo there, so time in Western Europe. and there will be only a limited spots available. So right now there are roughly a bit over 13,000 people. Last time I looked, it was 13,142 people on the wait list. But what we can already tell is that only a fraction will be allowed. Just because we want this to be exclusive, not everyone can get investment IDs with a market cap of 50 million USD, for example. Just because otherwise we would influence the stock price too much. The last I would want is that we announce, look, we will buy company X, and the next day it goes up by 25%. I don't think we want to play in that field. We don't want to play that game. So if you scan the QR code here, once again, you will put it into your calendar. And just like I mentioned in the beginning, if you even slightly consider joining, if you even slightly consider becoming a partner, I would highly encourage you to do on day one, because it might be your only chance. So on this slide, you get an overview of what everything you will get. So obviously you will get company deep dives. We have already written 12 so far of 40 pages. As mentioned, for small, high-quality stocks, it's not just about reading the annual reports and writing yourself. It's also about meeting management. So we'll also get those insights. You will get a portfolio. You will get the weekly updates, a watch list, a scorecard, one pages, and so on. So if you see that, well, I think I used the third party to estimate this, an estimated value of 9,800 USD, more or less. Well, I think I was in the US 3 weeks ago. There were a lot of people in the US convincing me, or at least trying to convince me, that this should be 10,000 USD a year, and that you would make way more money doing that, and it was only fair because that's even cheaper than what some institutional research does. But I don't think that's something that is fair to you as a valuable reader. And just because we are a team with 4 people, just the most important thing is to give back to you and to offer it at very cheap prices. And I will get back to you that in a sec. But this is the essential things that you will get. Well, other things you will get here is also the next Constellation software. So the key insights from talking 90 minutes with Jan Moore one-on-one. That's something you will receive. You will also receive, right away on the 16th of September at the launch, the 3 stocks we will buy that week. So immediately we will buy 3 stocks, and you will get access to a report with the 3 companies that we mentioned. So that's something you will receive on day one as well. But it doesn't stop there. It's also, briefly mentioned the example of Games Workshop being a 100 bagger. Well, there will be a course. How can you find those kind of companies yourself using Games Workshop as a practical example, so you can learn how you identify these companies yourself. And then, fourth bonus, also the week after the launch, there will be an exclusive webinar with 10 tiny titans to own forever. In other words, 10 small cap companies that are so high quality and that you could own for the next 10, 20 years and sleeping well, because they have so much upside potential. So those are also 4 extra bonuses that you receive. So to recap, well, the launch will be on the 16th of September. There were only a limited amount of spots available. Once the doors are closed, well, full is full. There's no way to get in anymore, and the price will be 1,500 a year. I see the most popular question, I think, is are there any discounts for members of Compounding Quality, of partners of Compounding Quality? I think yes, there is a discount, meaning, look, this offer will only be available for partners in the beginning. And once the spots are filled, there will be no way to get in anymore. The only way, if those spots are filled, and let's say just in 2-3 months, some person decides to give up his or her spot, then one spot becomes available again. But there are 2 very important things that you need to keep in mind. In that case, is one, then probably hundreds or thousands of people will be fighting for the same spot. And second point, if that happens in 3 months, 4 months, 6 months, I don't know, the price won't be 1,500 USD a year, but the price will be 5,000 a year. So that's a discount of, what is it, 70%, right? So that's the discount that partners get at the launch, basically. So once again, I would say, well, if you are even consider joining, I would do it on day one because it might be the only chance. And if it's not the only chance, it will be at 5,000 a year instead of 1,500 a year, which is quite a substantial difference, right? So I think I'll leave it here. Some people have already seen it. Well, we recently launched a WhatsApp community just for official communication about compounding quality, about when we announce when we buy a new stock, where we maybe sell stock, those kind of things. So this will be happened here. And I think then we have more or less 10 questions or 10 minutes left to answer some of the most common questions. So I'm not sure whether you will be comfortable to go over them a bit, Willem, or I'll see what the most popular ones are, and let's go from there.
Yes, there has been a lot of activity in the chat function and the Q&A function, so thank you for that. It's amazing to see that there's so much interest in Tiny Titans. One question that has quite a lot of upvotes is like, what's the minimum net worth that you think would make the service worth its fee?
It's a good question, and it's a very difficult question in general. I think I wouldn't put a certain amount on it. Why? Because it's also on the learning experience that will be the most important thing. I think, Willem, you are a teacher to some extent. I'm a teacher to some extent as well, and that's the main goal. And the main goal of those Tiny Titans is to just find some companies that can 10x, 20x, 40x over time. And I think it also makes sense if you invest $1,000 that it doesn't make any sense to take a subscription of $1,500, right? But I think the most important thing there in general is we only need one very, very big winner to make it worthwhile, and that's exactly the goal, I would say.
All right, yeah. And Peter, you said before that Tiny Titans would have more upside potential, but some is asking himself, well, why would you still subscribe to Compounding Quality then?
Well, like I said, for me personally, I think that tells it all. 80% of the portfolio will be invested in Compounding Quality, 20% for me in Tiny Titans. Why? Compounding Quality is very established. It's your cornerstone. So I've told that, look, for Compounding Quality, the goal is still to outperform the market by 3% per year in the long term. If we say, look, the S&P does 8, 9% per year in return, that would mean Compounding Quality, look, our goal is 12% per year. That's the return we want to achieve. That's what we want to do in the long term. I think right now we're at a compounded annual growth rate of 20%, which is great. But S&P, 9% per year, Compounding Quality, 12% per year, that's the goal. For Tiny Titans, as mentioned in the presentation, the goal is to double every 5 years. So that would mean that we would perform at a compound annual growth rate of 15% per year. And I think most people already know this concept, and I don't need to explain it. If you can slightly outperform the market, and 15% per year, by the way, isn't a slight outperformance, but if you can do that for very long periods of time, thanks to the power of compounding, just the differences become way larger. So I would say Compounding Quality is the cornerstone, and then Tiny Titans is your salt and pepper for the portfolio. So higher risk, but way more upside potential.
Okay, thank you. And also, I see a lot of questions about water, or that water may be the new gold. And like, for example, Jean-Paul asked, you sometimes hear people say, like, water is the new gold. Well, do you agree with that statement or not?
It's funny, right now I'm thinking, I don't think within the 94 companies in the Tiny Titan watch list, we have a lot in water. I think, like we mentioned just with the previous question, Compounding Quality is a cornerstone. Water might be a cornerstone as well, meaning it's very predictable. Water is a commodity and will become even more a commodity also in African countries and so on. So I think you have some interesting companies in water, but those are also some more established ones. So when I think about water and investments right now, I think more about the companies like Sealem, a company like Ecolab. So those are huge conglomerates that benefit from the large demand for clean water. For me personally, I don't invest any money in gold myself because it's a commodity. It's a good protection against inflation. Gold has done really well in the recent past, but I think in the long term, and the history has proven this, that stocks are the most interesting one, the most interesting assets to be in. And I didn't find too many companies within the water space, within the water segment, where we see, look, those are companies that are still small and that can still grow at tremendous rates. The water companies you see right now are more established companies that can grow by maybe 5, 6, 7% per year. But it's always interesting to keep your eyes and ears open, obviously.
All right, thank you. And I saw a couple of questions about like the stock market in general. Some people worry that it may be overheated right now. Well, what are your thoughts on that?
Yeah, I think it's a very fair question, and some people might have listened to the latest Memo, the podcast of Howard Marks, or read the Memo himself, where he basically also says, look, the market is quite very expensive, so watch out what you're doing on the market right now. Well, the funny thing is the S&P 500, for example, is valued quite expensively. But if you take out the big tech companies, if you take out Nvidia, Microsoft, Netflix, Amazon, and so on, the valuation is quite reasonable. So what we have seen in the past is that over the past 5 years, almost all the returns of the S&P 500 have been driven by big tech companies. And I think we will see a reversion to the mean there. So returning back to normal. And that's actually why we decided to launch Tiny Titans as well this month, because the small caps lagged a bit behind the large caps companies. They are way cheaper in general compared to the large caps, and that can be important as well. So valuation obviously is important, and I think just before Nvidia, for example, published its results, well, it has never been the case that one company has such a high weight in the S&P 500 as Nvidia today. Well, this is something that is not sustainable, and we will see some reversion to the mean. So what I would expect is that the very, very big companies, the big tech companies, for example, might struggle over the next few years, but that the small and mid caps, because they are still reasonably valued, there will be a flight from large caps to small and mid caps, and the returns, I would expect them to be better there compared to the large caps.
All right. Yuri is also is like asking kind of a practical question. Well, he thinks you're quite active on promoting Tiny Titans, and he's wondering, well, if there are limited spots available, well, why are you hyping it up so much?
Well, I think it's in short, like we mentioned, look, Tiny Titans is not for you if you and not those partners, but we want partners who are very, we have the right mindset, we want to win on the long term, and so on. I think just the most important thing is to attract the right partners. We want to pick and attract the right partners, people who are on the same field, not people who want to get rich quicks. And this way you can select a bit between your partners who you can accept the Tiny Titans and who you definitely can. So I think that's the most important thing. And that's one reason. And the second reason is just because over the past few days, I literally can't sleep because I'm so excited about the opportunities here. I think the opportunities are tremendous. You see a lot of potential in a lot of the stocks that we are researching right now. So we also briefly discussed before we went live, Willem, I think we never worked so hard on something in advance. We already wrote 500 pages of investment cases just to prepare, just because the upside is so high, and because I think this is definitely something that I would want my mother to read, to put it that way.
Mm-hmm. Yeah, I'm going to answer a practical question myself. There are a lot of questions about, well, will the replay be sent out? The answer is yes. I think you'll receive automatically an email from Webinar Geek with a link to the full replay of the webinar. So if you can confirm that, Peter.
Yeah, exactly. So that's
yeah,
true.
okay.
So you will receive it automatically. We'll also put it on YouTube so you can rewatch it. And I see the hour already expired. So maybe we can do one last one, Willem, if you still have one or see one.
All right. Yes, Tom is asking, are there quantum stocks in the Tiny Titans watch list, or maybe a possible Tiny Titan?
I think that's an interesting one. I received that question yesterday as well. I think what we will use in Tiny Titans is to apply the quality investment filter within small cap companies. But I think there will also be some room for what you could call moonshots. So moonshots are probably some companies that might be a bit more risky. Maybe they're on the verge of becoming profitable, but they have plenty of upside potential. And there will be room for 2, 3, 4 of those kind of companies. And within the quantum space, there might be some companies that apply to this. But hopefully, well, I think a lot will become clear also on the 16th of September when people get to see the final watch list, get to see the final or the first 4 stocks we will buy. And then, we will have an interesting time because, like mentioned, and I think it's the same for the entire team. Well, the upside is so tremendous, so excited, and you find those great small cap ideas. And honestly, I don't think it's fair that, for example, me personally, I would already buy a company before I publish it on Tiny Titans. And I must say I am very impatient. So I literally can't wait. So looking forward to the 16th. Then I'll give you guys 3 days to buy the stock, and then I finally, hopefully, I can buy it myself. So I'm just looking forward to that. And I think we received still a lot of questions, but I think we will call it a day for this one. But we will still skim over all the questions. If there is something really important, we are always available via email. So willem@compoundingquality.net and peter@compoundingquality.net. And ask your questions via email, ask them in the community. Happy to help you guys. And then we will see each other on the 16th at 8 a.m. Eastern time.
All right.
Have a lovely evening, everyone. And thank you for watching.
Bye-bye.